Ever get that feeling like you're on like a financial treadmill?
Yeah.
You're working hard, saving diligently, but somehow not really getting ahead.
It's a feeling a lot of people are experiencing, and
Yeah.
today's deep dive might shed some light on why that is. We're going to be tackling financial repression.
Ooh, that sounds scary.
It can be,
Yeah.
and how it subtly impacts your wealth.
So we have an article to help guide us through this.
Yes, we're going to be referencing an article called Financial Repression, Bitcoin, and the Debt Crisis, and it does a really great job of unpacking this complex issue. It's both fascinating and, frankly, a bit concerning.
All right, well, let's jump right in. So first of all, what exactly is financial repression? I mean, it sounds kind of scary.
Well, it's described in the article as basically a set of government policies designed to channel funds towards paying down their own debt, often at the expense of, well, everyday citizens.
So it's like a hidden tax almost.
In a way, yes. It's subtle, but it can have a big impact over time. And it really stems from these massive debt burdens that governments are facing, particularly in developed nations.
Oh, you all hear about the U.S. national debt, right?
Exactly. And the article puts it at a staggering number. Over $220 trillion.
220 trillion.
Trillion, yes. And that includes unfunded liabilities.
Wow.
To put that into perspective, imagine trying to pay that debt, just by taxing every single billionaire.
Like 100% of their...
100%, all their wealth. It wouldn't even come close.
So how does financial repression, try and tackle this?
One of the key tools is interest rate suppression. So basically, governments are able to keep interest rates artificially low, which makes it, cheaper for them to borrow money.
Right.
But it means that savers get really paltry returns.
Yeah, like my savings account, it's barely budging.
Yeah, exactly. And think about it this way. If your savings account's earning, say, 1% interest, right? But inflation is running at 3%.
You're losing money.
You're actually losing 2% of your purchasing power every year. And that's what we call negative real rates. It's kind of a hidden drain on your wealth.
It's sneaky.
Yeah, it is.
Now, the article also mentions inflation as another tool of financial repression.
Exactly, because inflation erodes the value of debt over time, right? So it makes it easier for governments to repay what they've borrowed. But the downside is...
It makes everything more expensive for us.
For you and me, it diminishes the purchasing power of our savings.
Oh.
So that means it's harder to afford the same stuff in the future, so everything keeps getting more and more expensive.
And your money is worth less and less.
Exactly.
Okay, so interest rate suppression, inflation, and what was that other thing they mentioned? Mandated investments.
Right. So basically, governments can steer big institutions like pension funds to invest heavily in, guess what? Government bonds.
Even if they're not doing well.
Yeah, even if those bonds offer low returns, because it creates this kind of captive market for government debt.
So my pension, my retirement
It's
savings,
being funneled.
to pay off the government.
It's essentially being subtly directed towards paying down the government's debt. Yeah, even if it might not be in your best interest as an investor.
That's unsettling. So it's like,
Yeah.
even if you're trying to do the right thing,
Uh-huh.
saving for retirement,
Yeah.
you're kind of trapped in a system that's, maybe not designed to help you.
It can feel that way. But the article's not just about making us feel powerless. It's about understanding how these forces work so we can make better decisions with our money, right?
Makes sense.
And speaking of powerful forces, we also need to talk about the role of central banks in all of this.
Oh, yeah. You mean like the Federal Reserve?
Right. They have this tool called quantitative easing, which essentially means creating new money out of thin air. It's what people call printing money.
We hear about that all the time.
Yeah. And while it can be helpful to stabilize markets in times of crisis, like we saw in 2008 and during the pandemic, printing trillions of dollars, well, it has consequences.
Yeah, like what?
Well, it dilutes the value of the currency that's already out there. And what does that lead to? More inflation.
Oof, that vicious cycle again.
It all ties together, and it hits average folks like us much harder than it hits governments with their huge piles of debt.
So this is where Bitcoin comes into the picture, right?
Yeah.
I mean, the article mentions it as a potential safe haven from all this financial repression stuff.
What's interesting about Bitcoin is that it's decentralized, meaning no single government controls it.
It's kind of its own thing.
It is, yeah. And unlike our fiat currency, dollars, euros, whatever, which can be endlessly inflated,
Right.
Bitcoin has a fixed supply. It's capped at 21 million coins.
So there's only so much of it.
Exactly. And that makes it really attractive as a potential hedge against both inflation and, government manipulation.
So it's like this escape hatch from the traditional financial system. Like you can opt out to a certain degree.
That's the idea, yeah. But not surprisingly, governments are getting a little nervous about it. They see it as a threat to their control over money.
Right. And they're not just sitting back and doing nothing, are they? I mean, the article mentioned some countries are trying to, like, restrict it, right?
Yeah, places like Italy and Denmark are proposing some pretty high taxes on Bitcoin transactions, almost like they're trying to discourage people from using it.
Like closing the exits.
That's a really good way to put it, closing the exits. So if people can't protect their wealth outside the traditional system, they're kind of stuck, right? And that makes them even more vulnerable to the effects of all this financial repression.
So what does this all mean for, our listeners? Why should they care about this?
Because this isn't just some abstract economic theory we're talking about, it's actually impacting everyone's financial well-being right now.
Like in a real, tangible way.
Yeah. Every decision you make about saving, investing, even spending, it's all influenced by these forces.
Whether you're aware of it or not.
Yeah, it's like playing a game where the rules are constantly changing, but nobody's telling you.
But now you know.
Now you know. And knowing is the first step to taking back some control.
So it's not all doom and gloom.
Not at all. It's not about panicking. It's about being informed. Because when you understand these things, well, then you can make smarter financial choices. And that's exactly what we're going to delve into in part 2 of this deep dive. We'll be exploring some more specific implications of this financial landscape. And we'll also dig a little deeper into, Bitcoin and its potential as a hedge. But first, let's take a quick pause.
Okay, so we've just laid out this pretty unsettling picture of financial repression. It's easy to feel kind of overwhelmed, But let's talk solutions. Like, if this is the game, what are some winning moves we can make?
Well, the article definitely highlights Bitcoin as one potential strategy.
Right, because it's, what was it, decentralized?
Exactly. No single entity controls it. And remember, it's got that fixed supply capped at 21 million coins, which makes it pretty resistant to inflation.
And you can, move it around easily and store it outside of those traditional systems.
Right, outside the banks. Yeah. Those are all attractive features, especially when you're looking for a hedge against both inflation and, government manipulation.
It's almost like this parallel system operating outside the usual rules.
Kind of, yeah.
But I mean, a lot of people get scared off by Bitcoin's volatility, right? Like it goes up and down so much.
Oh, for sure. It can be a wild ride in the short term. But a lot of its proponents, they argue that the long-term potential outweighs those short-term fluctuations. It's kind of like those early days of the internet.
Oh, I see.
A lot of folks were hesitant to get on board, but those who saw the potential early on and, rode out that volatility, they ended up doing pretty well.
Yeah, that makes sense. Now, the article also mentions gold, which has been, like the traditional safe haven for centuries.
Absolutely. Gold has a long history as a store of value, and because it's scarce, it tends to hold up well against inflation. The problem is, gold can be a hassle to store and transport. Plus, you can't really divide it up as easily as something like Bitcoin.
Yeah, especially in today's digital world. Bitcoin just seems like, I don't know, a more practical solution.
For a lot of people, I think so, yeah. But it's important to remember, no investment is completely risk-free. That includes Bitcoin. Diversification is key. You don't want to put all your eggs in one basket.
Right. Spread them around a bit.
Yeah. Now, remember that concerning idea the article brought up? Governments closing the exits, like trying to limit people's access to alternatives like Bitcoin?
Yeah, a little bit Big Brother-ish, right.
It can feel that way. And it's a trend that a lot of people are watching with, some concern. Because if people can't protect their wealth outside the traditional system, well, then they're just more vulnerable to all those effects of financial repression we were talking about.
Yeah, it feels like this kind of battle brewing, for financial freedom.
That's a good way to put it. Governments on one side, individuals looking for solutions on the other. But, instead of getting caught up in that fear, let's empower ourselves with some knowledge, right? What are some things that our listeners can do to start navigating this whole financial landscape?
Yeah, let's get practical. What are some, actionable steps?
Well, first and foremost, stay informed. Pay attention to what's happening in the economy, understand the forces that are at play, and don't be afraid to question the status quo.
So, don't just blindly accept everything you're told.
Exactly. Do your own research. Ask questions. Knowledge is power. And speaking of power, diversify your assets. Don't rely solely on those traditional savings accounts or investments that are vulnerable to inflation, or manipulation.
So look into things like, what? Precious metals.
Yeah.
Real estate.
Yeah, those are good ones. And cryptocurrencies if you're comfortable with the risks.
Right, because it's about having options.
Exactly. And something that people often overlook is reducing their debt burden. The less debt you have, the less vulnerable you are to those rising interest rates and, just the general economic uncertainty we've been talking about.
It's like getting your financial house in order,
Exactly.
clearing out the clutter.
Yeah, creating some space.
Yeah.
And you know what? Here's an idea. Look into generating some passive income streams.
Ooh, I like that. Like making money while you sleep.
Right. Think about dividend-paying stocks, maybe rental income from properties. You could even, create and sell digital products online.
So many options these days.
Right. Having those multiple streams of income, it gives you a cushion. You're not relying on just one source, like a job.
Like multiple rivers flowing into your financial lake or
I
something.
like that analogy, yeah. Multiple rivers. And this might seem obvious, but it's so important. Invest in yourself. Your knowledge and your ability to adapt, those are incredibly valuable, especially in a world that's changing so fast.
So take some courses, learn some new skills, stay up to date.
Exactly. Empower yourself to navigate this crazy financial landscape. Don't just react to it. And don't be afraid to, think outside the box a little bit. Explore those alternative financial systems and technologies like DeFi, decentralized finance.
Now, for those who aren't familiar, what is DeFi?
It's basically a way to manage and grow your wealth outside of those traditional financial institutions. It uses blockchain technology, which makes it more transparent, more accessible.
It's definitely a whole new world.
It is. It's still emerging, so there are risks, but it's definitely something worth keeping an eye on. And maybe most importantly, cultivate a mindset of financial responsibility. Think long term.
So make conscious choices,
Yeah.
plan for the future, and don't get sucked into those, get-rich-quick schemes.
Exactly. Building lasting financial security, it takes time, it takes effort, it takes sound principles. There are no shortcuts.
No magic bullets.
Nope. So as we head into the final part of our deep dive, what's the core message here about financial repression?
I think it's that even though it's a real challenge, we're not powerless.
That's it. Understand the dynamics, explore the alternatives, and be proactive. You can build a more secure future.
Take control, embrace innovation, keep learning.
Love it.
So we've talked about this whole financial repression thing and some strategies to, navigate it. But let's get specific. Like, what can our listeners actually do, like right now, to protect their wealth and build a more solid financial future?
Well, one of the most important things is diversifying your savings and investments. Don't keep all your money in one place, especially not in those traditional bank accounts that barely give you any interest.
Yeah, especially when that tiny bit of interest is getting eaten up by inflation.
Exactly. Think about adding other types of assets to your portfolio. Precious metals, for example. Gold has historically been a good store of value during times of economic uncertainty.
All right.
And then there's real estate. A tangible asset that can generate rental income and also appreciate in value over time. And then, of course, we talked about cryptocurrencies like Bitcoin. They can be volatile, sure, but they do offer that potential hedge against the, traditional financial system.
It's like having a mix of different ingredients, to create a balanced meal.
I like that analogy, yeah. A balanced portfolio. Now, another important step is to tackle your debt. The less debt you have, the less vulnerable you are to those rising interest rates and economic uncertainties we've been discussing.
It's like decluttering your finances.
Exactly. Yeah. Getting rid of that unnecessary baggage.
Makes things so much lighter.
It does. And here's another idea to consider. Look into ways to generate some passive income streams.
You mean like making money without actively working for it?
Exactly, yeah. Things like dividend-paying stocks, or maybe you could get some rental income from properties. You could even create and sell digital products or services online these days.
So many possibilities. So you have all these different streams of income flowing into your life.
Yeah, instead of relying on just one, like your job, it creates a nice safety net.
Now, this next one might seem obvious, but a lot of people forget about it. Invest in yourself.
Absolutely. Knowledge and the ability to adapt are so important, especially in today's world where things are changing so rapidly. Take some courses, learn some new skills, stay informed about what's happening, the new trends.
Empower yourself. Don't just sit back and let things happen to you.
Exactly. And, don't be afraid to explore those, what do you call them, those outside-the-box solutions.
What, you mean like alternative financial systems?
Yeah, things like DeFi, decentralized finance. It offers some really interesting ways to manage and grow your wealth without relying on those traditional institutions. It's still pretty new, but it has a lot of potential.
And if it seems a little overwhelming, there are lots of resources online to help you learn about it.
Oh, for sure. Tons of information out there. And I think one of the most important things, maybe even the most important, is to cultivate a mindset of financial responsibility. Think long term.
So make thoughtful choices, plan for the future.
Yes. And don't fall for those get rich quick schemes. They rarely work out the way people hope.
It's like slow and steady wins the race, right?
Exactly. Building real financial security takes time and effort. It's not about finding some magic formula or shortcut. So, as we wrap up this deep dive into financial repression, I think the key takeaway is that even though these forces are real, we're not helpless. We can learn about them, explore alternatives, and take steps to manage our finances proactively.
Yeah, it's about taking control of your financial destiny, embracing innovation, and never stop learning. The financial world is constantly evolving, so we need to evolve with it. Stay curious, stay informed, and most importantly, stay empowered. Until next time, keep diving deep.